Nothando Ndebele, Head of Research at Renaissance Capital, now joins us for more investment insight, and we're focusing on Africa. We keep talking about taking money offshore and investing into the international market, but there's a lot of opportunity to be had on the African continent. We know that when it comes to equity markets, low liquidity is what really pushes a lot of people away. But tell us about what kind of opportunities lie here.
Yeah, I think the liquidity issue has been quite significant, especially over the last sort of 12 months. But that doesn't obscure the fact that there's lots of investment opportunities. One of the sectors we like is the banking sector. If you look, especially in Nigeria, you've got a lot of banks trading at less than 1 times book. Now, we've had a banking crisis in that market in 2008, 2009, and we've had several years of cleaning out that sector. So in our view, things are starting to get a little exciting, and some of those names are looking pretty interesting, especially when you compare them to the sort of ratings that you're seeing for banks in other markets, like here, where the banks have run pretty hard. You're seeing more interesting opportunities, I think, in parts of the continent. Kenya, the banks are a little bit more expensive, but again, they came off quite a lot last year. And given the sort of returns that they generate, we think they still look pretty attractive as well.
So let's just touch on the Nigerian market, because we had AMCON coming to the fore and, of course, bailing out a lot of the banks, nationalizing some of the banks. Those banks are now up for sale. What is your sense with regards to some of the investment opportunities? I mean, let's look at specific cases where you're interested in specific banks. Would you say just buying into the overall banking industry, the financial sector within Nigeria, would that suffice as an investment opportunity?
I mean, there are a lot of listed banks in Nigeria, so you get a choice to build a portfolio. You can decide, do you want to go for the less risky banks, in a sense, the ones that tend to generate good returns, good sort of stable growth over time, whether you're looking at a GTB or a Zenith, or do you want to go for some of the smaller banks which are growing, have gone through mergers and acquisitions? I mean, last year we saw 3 banks make some pretty big mergers and acquisitions out of the failed banks. So you have a bigger Access Bank, you have a much bigger FCMB, and you have a bigger ETI through EcoBank Nigeria, which acquired Oceanic Bank. And then you have what we call the Tier 2 banks. These are more your smaller niche players, and again, there's about 5 or 6 of them, whether it's a Sky or it's a Fidelity, etc., Diamond Bank. There's actually quite a lot to choose from in Nigeria, and it's really based on your view of the risk of that market and where you like to play on the risk curve.
So just hearing those names, Wayne, a lot of banks in Nigeria.
No, they are, but I mean, look, I mean, as Nothando said, there was a big shakeout in this market a couple of years ago. I mean, these things, the banks went bankrupt there, they fell like flies, so I suppose there's a couple of questions. Is the shakeout over? It's the first question. Second question is, other than Nigeria and Egypt, what other markets have got liquidity in Africa? Where else can you find some opportunities?
Okay. I guess the first question is the cleanup over? We would hope so. There was a push in the last quarter of last year, where the banks were trying to get to NPL ratios of about 5%. So we've seen more sales. And also I think what's encouraging is that you've seen AMCON moving from buying not just the non-performing loans, which the banks were sitting with on their balance sheets, but AMCON also started to look at what loans pose a systematic risk to the system. What do we need to take off? So they even looked at some performing loans, which they just felt were too big. So overall, I think there's been a large de-risking program that has been largely completed now. And this year should be a better year. We thought last year would be a better year, but I think we needed that additional year of cleaning up the balance sheets. In terms of what other markets offer liquidity, again, if you're looking outside South Africa, you're right, Nigeria and Egypt are probably our biggest markets. Kenya is a lot smaller, it's probably doing about 5 million a day. And then you get into smaller and smaller markets. Zimbabwe is about 1.5 million. Morocco is a big market, but it's not that liquid.
Yeah. Okay, Kenya's also quite interesting. Let's look at the banking stocks there. Slightly more expensive, but we've got a very high inflation scenario that is playing out. Interest rates that I think are sitting around 18%. It is said that for the next 3 consecutive quarters, we'll actually see suppressed growth for the Kenyan banks. Is this your view as well? Or do you think opportunity can still be found there?
I think the banks reacted last year in anticipation of the high interest rates, especially when we started to see hikes of 400 basis points, 500 basis points in reaction to the increasing inflation. So they came off quite sharply last year. They've already had a decent run this year, and I think the view is that inflation has peaked and that interest rates have peaked. So we think that their earnings growth will be lower this year. It's inevitable. I mean, last year, credit growth was running north of 30, 40%. that's going to come right down this year with interest rates at that sort of level. So we are looking for slower growth, but that's been priced in.
Yeah.
So it will, they still look pretty attractive to us given the sort of returns that they generate.
Nothando, I mean, we've got an Africa fund that's been around a couple of years, and our Africa team, I think, is doing a very good job. They certainly know their companies, and the return of our fund has actually been quite good. But the point is, no one wants it. You can't sell this to anyone. Why not?
But
We've tried our best.
Where
You
are
just
you
can't selling it.
Where are you selling it?
Selling it in SA, and that's the problem.
Yeah, I think that is the problem. I think it's unfortunate because we are more risk averse towards the continent than the rest of the world. So when we look at the investor base that we take around the continent to meet corporates, they're from everywhere, whether it's sovereign wealth funds from the Middle East or Asia, or it's investors out of Europe or out of the US. We have got growing interest out of South Africa, but still you're seeing a lot more interest from elsewhere.
So we must pack our bags.
I just think we need to do a better job of selling our own continent story within our continent. We sometimes forget South Africa is in Africa.
But what about the multinational companies that are listed in Africa? It seems that those are the favorite. I mean, British American Tobacco Kenya, for example, fantastic results that came through. They're expanding further. It seems that is one of the favorites. Total Kenya also seems to be one of the favorites. The multinational companies still make top when it comes to the investment scenario. Do you think that could actually change where we look at homegrown companies also making it as one of the investment opportunities for foreigners?
Well, I mean, I think there comes a point where you can't ignore the homegrown opportunities. Cement is a good point, for instance. If you look in Nigeria, if you go back 8 years ago, Lafarge used to dominate the Nigerian cement industry through WAPCO. And if you look now, they have a market share less than 30%, and the biggest market share owner is Dangote Cement. That's a homegrown company, and it's one of the largest companies in Nigeria. So you cannot ignore it as an investor if you're looking at Nigeria. So I think you're going to start to see more and more stories like that. Historically, people have liked the multinationals because they're sort of an easy play. You understand their strategy, you understand the parent company, and they've got that backing of the parent company. But that will change as we get more comfortable with our own continent.
Are you comfortable with our own continent, Wayne?
I am.
Do you have exposure to Africa?
We must just go and get foreigners to buy some of our funds.
Yes.
Fantastic. On that note, thank you so much to both of you for joining me. Great to have you on the program. That was Nothando Ndebele, Head of Research at Renaissance Capital, and a big thank you to my guest host. That was Wayne McCurry from Momentum Asset Management.